Okay. Well, thank you guys for all the good lucks. Appreciate that. Alright, then. Okay, let's begin. Just quickly look at the chat. Stream isn't working. Does anybody else face that? Is anybody else facing that? Thank you. Deactivate. My click isn't working. Okay. Yep, the noodles are cooked. I took them out in a plate. Okay, nobody can see the stream. So let's just restream the stream. And there we go. Is it better now, guys? Is it better now? Okay, very good. Now let's just open Discord twice, right? So cool. So tough. Okay. Maybe just do this. How do I do it? It's not, well, it's not supposed to be like this. Okay. And then we go here. Then wait, what? Where's the thread? The thread. Where's the thread for the questions, guys? Why can I not? Okay, okay, over here. My bad. All right. Let's begin. So we're gonna start with like the first question first, right? So let's. Oh, okay, it's supposed to be this way. One second. Technical difficulties. And then we can just split screen this. All right, very cool. Then I can just, I'm going to the A levels. Wow, congratulations, I guess. A levels is a big deal. Oof, thank you, bro. That makes me feel good. All right, let's begin now. So the first question says a trader's bank statement showed a credit balance of 2940. So, we're talking about the bank statement here. This is kind of the opposite as the cash book. One second, can I make this smaller? I put it here. Okay, I cannot. Anyways, so traders, a bank statement showed a credit balance. Now, you know that the bank statement is opposite of your cash book, right? So in our cash book, a debit balance means a positive balance. So in the bank statement, a credit balance is a positive balance. Okay, so this is not an overdraft. All right, the following items had not been entered in the cash book. Bank interest received. This is something we will record in our cash book, right? Because they're not entered in the cash book. And then credit transfer, this is, we're going to record it on the credit side of our cash book because we're kind of paying money. What was the debit balance of the cash book before it was updated? Okay. Well, I just closed the chat. So cool. Okay, let's open the chat again. There we go. Wow, thank you, bro. All right. So we start with, we can just, how do we do this? Oh yeah, we can find our updated cash flow balance. How do we find our updated cash flow balance? We just prepare a bank reconciliation statement or something. Wait a minute. What? 2940 is our bank statement balance. And then we receive bank interest if we just do minus 70 and then plus 280. Is that gonna work, guys? Kind of confused. Should I be the one being confused? Does anybody know the answer to this question? That's how it's done, right? Okay. Anyways, so 1 second, let me just calculate that. 2940 minus 70 plus 280. That gives us 3150. The answer will be C. So let's just kind of understand the question. I should not be confused. That's not nice. Come on, like it should be fair, we all can be confused. Okay. Well, so 2940 is our bank statement balance. And then bank interest received was recorded in the bank statement, but not recorded in the cash book, right? If we want the cash book balance, we can just remove it from the bank statement. Okay. Does that make sense? So $70 is recorded in the bank statement. But if you remove it, it's no longer recorded and you get the value of the cash book. Okay. Yes, it is recording. No, I make mistakes as well, bro. Credit balance is correct. You mean like my credit transfer plus, but bank receipt is minus. Okay, bank, that's what I'm telling you. Okay, so what's it? Bank interest received is an income for you. Okay, in your cash book, it's going to be debited, but you want to, kind of do the opposite, right? So you're going to reduce the balance. To do that, you're going to kind of subtract the balance to get you to the cash book from the bank statement. You know what I mean? This is the bank statement balance, and you want to find your cash book balance. Your bank statement balance is greater by $70. So to make it equal to your cash book balance, you're just going to reduce it by $70. And then the same concept applies here when you pay money. So your bank statement balance is less by 280, and to make it equal to the cash book, it's boom, you just increase it by 280, right? But you're not doing a paper. Credit transfer is simply paying by bank. Okay, so you know how you go to the store and then you're like, hey, I don't got money, but here's my bank account information or something like that, and then like the bank is gonna pay them. That's what credit transfer is. Yes, inverse calculation, exactly. We're not doing a specific paper, we're just doing a bunch of questions. So the answer to the first question is hopefully C, and let's move on to the next one. Uh, by the way, like people didn't really send answers, not everybody sent answers. So we're going to be relying on my answers, right? Though it can be wrong. So if you guys send the questions and you know your answers, like, the mark scheme answers, then just tell them, okay? Like, tell your answers. All right. Anthony does not keep a full set of accounting records. He knows his opening and closing cash balance and wishes to calculate his cash sales. Okay. Which item does Anthony not need in order to calculate his cash sales? How are you going to get your cash sales? You're just going to like, check out your cash. You're going to check your cash related stuff, right? Okay. So cash bank, of course, like you need to know how much cash you have in your bank. So you can kind of, you need to have track of your cash if you want to find your cash sales. But one thing over here that doesn't affect your cash, like your cash, like the money in your hands, is cash discount. Okay. So no, 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 not the. If we get cash discount, we don't really pay less. Like we don't really get money in our hands. We just pay less. You get that? So in cash discount, there is no money exchanging hands. It's just pay less or receive less. So that's why it doesn't really affect your cash sales. Now you guys might be like, bro, what do you mean? Like if we have more discount, we're gonna have less sales. Actually, no, because like let's look at the double entry stuff, right? Trade discount is not recorded, cash discount is recorded. Okay, trade discount is only shown in the invoice. They did mention the type of discount, cash discount. You know what I'm saying? There's only two types of discounts, bro. And like whether it's received or whether it's paid, you don't need it to calculate your cash sales. If it's paid, you of course don't need it because it's relating to suppliers, buying goods. If it's received, wait, sorry, did I mix it? Oh yeah, I mixed it. Okay. Well, if it's cash discount received, it's relating to your supplier, so there's absolutely no connection. But if you give discount to your customers, it doesn't really affect your sales. This is why. So let's just say you sell goods on credit. What are you gonna do? Debit customer, and then you're gonna credit sales because like you always credit sales, right? Then in your like your customers pays you money, so you just debit cash, and then you give them like a lot of cash discount. So you also debit cash discount, right? Because it's an expense, so it gets debited, though this shouldn't be indented. And then you're going to credit the customer's account because like you want to reduce the balance in their account. Okay, so you see sales is not mentioned anywhere except for here. Okay, so it doesn't really reduce sales. Crazy, right? I know. Okay, so the answer to this is B for Batman. If I don't know how to do any questions, where do I post it? Bro, you just posted You don't post it anywhere. Your exam's tomorrow, isn't it? But okay, anyways, if you have a question, you can just post it in the accounting chat. You just go all the way to somewhere here, but I have it as favorites because just amazing. And then you can just post the question over here, and then hopefully I'll explain it probably. Okay, don't cry, guys, because crying is for anyways. Next question by our comeback seal. All right, anyways. After the preparation of Abdul's draft financial statements, no errors were discovered. What do you mean, wait, bro? You're gonna eat noodles, I don't wait. But the first question you did was wrong. Actually, no way. Thank you for pointing that out, bro. Okay, this is sad. 2590 and 2940. How big is the difference between those two? 2940 minus 2590. The difference is 350, 280 plus 70. This is crazy. Why is it like this? According to the mark scheme, they added these two to the cash book, but I don't know why it's like this. Like I can't process it. Do you guys do know why it's like that? They subtracted both. No, what? Oh, okay, my bad. I messed up with the calculation. A little slow. You guys can see this was correct and this was incorrect. Huh? Okay, that makes sense. Credit transfer to $80. This is when we give a credit transfer, our bank balance reduces. The bank statement balance is lesser than our cash book balance. To make it equal to our cash book balance, we need to add it. Why reduce it? Which statement describes the purpose of bookkeeping? We have a question like that. Well, I don't think we have a question like that because credit transfer was sent out, not received. If it's sent out, then that's exactly why you have to minus it. Like, if you send, wait, what did I do before? Before I added it, right? 1 second. Am I confusing myself like crazy? But I said before it was updated. Exactly. So cash flow preferred was updated, meaning the cash flow does not account for these. I'm really sorry, guys. This isn't supposed to happen. I'm supposed to be the one helping you guys, but I don't know. I'm being confused for absolutely no reason. Uh, subtracted both to get a. These are the total. The answer to this is probably C. Credit transfer. Credit transfer will mean sent out. Usually it's going to mean sent out. Yes, exactly. I thank you, man. MS is saying it's C, but why not B? Not B because because you prepare final financial statements from your trial balance, not from your double entry and stuff, and that's not the purpose of double entry way either way. We are losing marks in their discussion. To be honest, the bank statements show a positive balance. The two items not entered in the cash flow both involve money going into the trader's bank account. Bro, this is stupid. This is oh my god. They're saying both involved money going into the bank, the trader's bank account. Meaning they're saying that this credit transfer is credit transfer received. Who told us that? Like what? Yeah, like we're getting money from it. I've never seen it like this. It's always you pay by credit transfer. It's just crazy. Okay, well, that's CIE for you. Let's move on to the third question. Oh, well, I'm hope this I'm hoping this makes sense now. Like why we subtract both of these. Yeah, this is all right. Then let's move on to the third question we have over here. Let me just drink some water. Okay. After the preparation of Abdul's draft financial statements, two errors. Let's go. Two errors were discovered. What effect will correcting these errors have on the non-current assets and the working capital? What's working capital, guys? Is the capital that works for? No, it's not. It's current assets minus current liabilities. All right. So the answer was A or C. From which question? No. For oh wait, for yeah, it's A. My bad. Forgot to correct it here. The answer was A because the mark scheme is stupid. Okay. Well, you should know that, bro. Working capital is current assets minus current liabilities. It's basically the amount of capital that's like your capital, which is working for you. Haha. Is it? No, that's current ratio, bro. That's current ratio. Is it? Is it? It's not. It is. It is. Yep, exactly. Okay. All right. All right. So these are non-current assets. Or let's look at the errors. The purpose of a machine purchase of a machine by bank transfer, 5,000 was omitted from the accounts. So to put this back into the accounts, you simply debit machine, which is a non-current asset, and you credit bank, which is a current asset, meaning it affects our, what's it called, assets directly. It reduces our working capital by 5,000, right? 5,000. So it reduces the working capital by 5,000 because it reduces our current assets by 5,000. Does that make sense? And then the next error is the purchase of a motor vehicle 15,000 was entered in the motor vehicle repair account. So to fix this, we just credit the motor vehicle repair account because like it was debited there wrongly. So we credit that to fix the error. I'll just write in short form. And then we debit our motor vehicles account because like it's a purchase of a motor vehicle. And there we go. This reduces our expenses. It doesn't affect our assets or liabilities. And this affects our non-current assets. And does it affect our capital? I don't think so. So we have to talk about non-current assets and working capital. Okay. So this increases the non-current assets and this also increases the non-current assets and this decreases the working capital and this has no effect on working capital, meaning our working capital reduces by 5,000 and our non-current assets increase by 15 plus 5, which is like 60, which is like 20,000. Okay. So the answer is C. There we go. At least it's not only me. What did you guys do, bro? No, none of you are failing, bro. Trust me, trust me. You guys need to get an A star, bro. Trust me, trust me. Okay, let's move on to the next question. Question number 4. Over here, we have when preparing his financial statements, a trader valued his inventory at cost. Oh my god, big problem. He found that 10 units of inventory costing $12 per unit were damaged. If he spent $2 per unit on repairs, he could sell them for $9 each. Okay, now how do we have to value our inventory? We have to value our inventory at what's it called, lower of cost and materializable value, right? So cost is basically your purchase price. Let's just write that. Yup, nothing suspicious. And then plus carriage, plus like purchasing expenses. So usually carriage inwards, mostly for carriage inwards. Uh, it is possible to get A star with 30 out of 35. Okay. Wow, thank you. Okay, okay. So that's how you calculate your cost. But then what about net realizable value? So this is basically estimated selling price minus selling expense. Okay. So let's look at the question again now. We found 10 units of inventory which cost $12. They were damaged. Okay. If we spent $2 per unit, we could sell them for $9 each. So our estimated selling price is 9 and this is 2. So the net realizable value is 7. I feel like I'm doing a mistake, but we'll find out when we, get to the answer, I guess. Guys, focus, guys. Okay. What was the effect on the income statement of the correct inventory valuation? So it was valued at 120 because like it was valued at 12, and there's 10 of them. So 12 times 10 is 120, but it actually deserves to be valued at 70, which means we had overstated our closing inventory, right? Where is it? Valued his inventory at cost. Can they please tell us if it's opening inventory or closing inventory? It's going to be closing inventory because like you value your inventory at the end of the date. Nobody values their inventory at the start of the year. And it's overvalued by how much? We had overstated it by $50 and you fixed that error. So if you're reducing your closing inventory, so like your closing inventory is being reduced by $50, that means your cost of goods sold is going to be increased by $50. Yes. Do you understand why? Because you subtract your closing inventory and your cost of goods sold. So your cost of goods sold is increasing by 50, which means your gross profit reduces by 50, which means your profit for the year reduces by 50. What was the effect on the income statement of the incorrect inventory valuation? We overstated our profit by $50, and we also overstated our gross profit by $50. Over here, I wrote the effect of like correcting the error. Okay, they're asking the effect of the error. When you get the answer for one of them, you just have to use some common sense. And the answer to this is B. Does that make sense? I thought I was explaining slowly, so like I was thinking of I was thinking of going faster, but no problem, guys. Okay. Ahem, ahem. Okay, okay, okay. All right, so I was eating noodles. Yummy. So you know what cost is, right? Cost is basically your purchase price, like the amount of money you pay to buy the good, and then you pay carriage inwards, which is like delivery fees. Yeah. So both of these are wow. Okay. So both of these are your what's it called? Both of these are part of your cost, and then to find your net realizable value, you have this tiny formula. It's called like estimated selling price minus selling expense. And you just take your estimated selling price, which is given to you by the question. In our case, it's $9. So we take $9 minus $2 because the question literally says if he spent $2 per unit on repairs, then he could sell them, for whatever. So to repair the good is your selling expense, right? Because you cannot sell it in the damaged condition. You need to repair it to be able to sell it. So yep, selling expense is $2 and estimated selling price is $9. 9 minus 2 is 7. And we have 10 units. So if you value 10 units at lower of cost and net realizable value, cost is 12 and net realizable value is 7, which is lower. 12 or 7? Come on, guys. I'm pretty sure you guys can answer that. Bro, who said 12? Your name. Okay. Yeah, 7. It's lower because 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 we don't need a reason right now. We can talk about it later. Okay. All right. I shouldn't be eating during class though. I guess it's not nice. Okay. Anyways, so yep, lower of cost and net realizable value. Cost is 7 and net realizable value is 12. We take the lower value and we have 10 units. So we do 10 times 7, which is 70. And before we had valued it at cost, which is 10 times 12. So we valued it at 120 while it actually was supposed to be valued at 70. So we overstated the inventory, the closing inventory by $50. Now, if you overstate your closing inventory, your cost of goods sold gets understated. Okay. Why? Because you subtract your closing inventory in the formula. Now, if this doesn't make sense, pause over here and think the formula in your head and use your brain a little bit, and you're gonna understand it. Okay. Yep, exactly. Bro, come on. Is this cyberbullying? Am I getting cyberbullied? Okay. Anyways, yeah, I think so. I think so too. You have too little. Well, the speed we're going, bro. We did 3 questions in 30 minutes. That's not nice. That's why I was thinking that we should speed up, or maybe I should just stop eating. Well, whatever. Okay. So yeah, this makes sense, right? When your cost of goods sold is overstated, your gross profit and profit for the year is, sorry, your cost of goods sold is understated because your inventory was overstated, which leads to your gross profit and profit for the year being overstated. And then if you're looking at this calculation, then this is what I did for like, the effect of correcting the error. Okay. So if you correct the error, your profit is understated. But if you don't correct the error, it's just the opposite, right? Your profit is overstated. Okay. I hope this makes sense. If it doesn't, then Please make it make sense, okay? Because we don't really have that much time. And the answer was it B? MS answer B. See, it's amazing, perfectly correct. Uh, the stylus is acting weird. Guys, I'm okay with speedrunning, but I need to understand, like, I need to be able to do the question myself as well, right? And then I need to be able to explain it as well. So that's the thing, you know what I'm saying? You know what I'm saying? All right, let's move on to the next question. This is going to be our fifth question. When preparing his financial statements, trader, we just did this question. Moving on, Raj and Seema are in a partnership, sharing profits and losses 2:1, meaning like there's a total of three, okay, yeah, whatever you call it, and then it's gonna be like 2:1, okay, out of three, okay. Raj withdrew 5,000 during the year and was charged interest at 3%. And fifth, let's just calculate the interest on drawings over here. We just do 5,000 times 3%, big brain mathematics. And this gives you $150 is the interest on drawings for Uncle Raj. Interest on drawings, there we go. Oh, this is Raj. All right, perfect. Seema did not make any withdrawals during the year. The profit was 30,000. How much was credited to Raj's current account at the end of the year? Now, you guys know that on the credit side of the current account, we have anything that the partnership, or like you could say the business, has to give to the partner. Okay. So for example, the profit for the year, when you share it, I'm the partner, I will get my profit, right? So where do you record it? As accountants, you're going to record it on the credit side of the current account. Okay, and yep, let's kind of do that. So when we make our profit and loss appropriation account, that whole thing, we start from profit for the year. We start with like 30,000, and then we subtract all of those things. We subtract and we add all of those things. We add. No, I'll actually help you. Okay, we add anything that increases the profit, which is like interest on capital, and then we subtract anything that it's okay, and then we subtract anything that reduces the profit, which is interest on drawings in this case. So we just do 5,000 and that gets us 25,000 as our final value. That's too much zeros. Let's fix that. Okay. And now we just do 25,000. Let's just look at how much Raj is getting. Raj gets 2 shares of this. So we divide this by 3 times it by 2. My answer feels very wrong. We shouldn't get decimals in accounting. Oh, I'm kind of stupid. We don't subtract the entire drawings value. We only subtract the interest on drawings, which is $150. And then that gives us, wait, is it actually 150? That feels too less now. I think I'm doing it wrong again. But anyways, so we subtract $150, 29850, divide this by 3 because there's, 3 parts to this. And then Raj gets 2 parts of them. So 19,900 is the profit he gets, okay? And then he has to pay interest on drawings. So what do? Do we subtract that? We don't, because we credit the amount, the profit. This is like, let's just say Raj's current account. Wow. Wow. I'm surprised. How can I write that? Okay, anyways. So Raj's current account, and then we just credit 19,900 over here because they profit share. And then this is gonna be 150 interest on drawings and 5,000 drawings. Okay. So on the credit side, we only have 19,900. The answer is B. What the what? Why is the answer D? What wait, am I yeah, why is the answer D? Bro, explain. 20,100. Uh, Profit for the year was 30,000. Did I mess it up or what? Hmm. On the debit side of the current account, things like that, the things that the partner owes to the business, for example, drawings and interest on drawings, anything that the partner has to pay to the partnership. Okay, yeah, anything that reduces capital. Fine. Interest from loan given to business by one of the partners. It will go into the current account because the partner receives money, and it's going to go in the income statement because it's like a loan expense. Thank you, thank you. Thank you for the peak handwriting. Interest is wrong. Is it? Why did you minus interest on drawings? You messed up? Or really? Did I mess it up? Interest on drawings increases profit. Oh, thank you, bro. I am little slow, you see. So yes, interest on drawings increases profit because this is something that the partner pays us. Okay, so he takes drawings and then he kind of has to pay a fees to the partnership because he, took the drawings, which is not nice. So to discourage the partners from taking drawings, we have this thing called interest on drawings, and there we go, 20,100 is the profit share, which is going to be credited to the partner's account, and that's D, which is correct. All right, moving on to the next question because I'm sure that the previous question is kind of clear. The answer is A. No, it's not. Which question are you talking about? Yep, perfect. Answer is D. What's on the screen? Oh, this one. Trader does not keep full set. Well, we'll get to it, don't worry. Yeah, okay, anyways. So, proof. Or let's just continue here, I guess. We're at our question number 6. 6 questions in a lot of minutes. That's not good progress, but we're just gonna do it. Okay. Can you go? Okay, amazing. All right. A trader does not keep a full accounting records, but was able to provide the following information. During the year, 9,500 was withdrawn from the owner's private bank account to purchase a motor vehicle. Fine. What was the profit? Okay. So you know how you guys calculate closing capital, right? There's this formula to calculate closing capital, and that formula includes your profit for the year. So you can use some algebra, and then you can kind of get to the profit for the year. So this is the formula, by the way. Closing capital is going to be simply your opening capital, uh, sorry, opening capital plus anything that increases your capital, which is additional capital during their national withdrawal from James Bank. Okay, plus additional capital and anything that reduces capital, which is drawings. Okay, and profit also increases capital, so you add it. And yeah, that's it for this question. Now we're gonna just put in some values. 37,000. Sadly, not 60. Okay, 37,000 equals to 26,000 plus, and then additional capital. Look here, during the year 9,500 was withdrawn from the owner's private bank account to purchase a motor vehicle to be used by the business. So if I have a lot of money in my bank account and I'm like, yo, my business needs some money, and then I buy a car for my business, is that called additional capital? Is that an investment? It is an investment. Okay, so this is going to be additional capital. We're just going to write it as 9,500 because I think that's the value, right? 9,500. Yep. Okay. And then we have to subtract our drawings, which is like 6,500. And then we have to add our profit. Now we can make profit the subject, and then I don't know, probably do something. How do we do that? Profit equals to, I think, like 26,000 plus 9,500 minus 6,500. Maybe like minus 37,000. Is that correct? And yep, that's not correct. Really? Do I don't know algebra? Science really? Why? Which one? What did I mess up? Oh, negative profit. Oh my god, big problem. Uh, yeah, well, you guys get the point. We don't need to learn algebra here. This is accounting. Actually, no, we do need to learn algebra. It's really helpful. Profit 37,000 minus 9,000. Wait, what did you do? Yeah, 37,000. 37,000 minus 9,000. Oh, okay, fair. 37,000 minus 9,500 minus 26,000 plus 6,500 is equal to profit. Okay, and then you can just calculate that. My friend here calculated it for us, so that's 8,000. Thank you, uncle. And 8,000 is our profit, and that's option A. Yo, bro, you mentioned, you said the answer is A. That is correct, right? That's W. My answer A, and its answer A. Okay, perfect. Let's move on to the next question. This is going to be our question number 7. Yes, uncle. How old are you, bro? You're like uncle old. Check the question, including semesters. Dun, 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 dun. Dun, 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 dun. Okay, I am 50. Okay, bro. I'm not uncle as well. I'm like 17. Okay. I'm chota bacha. Okay. Jabari maintains a petty cash book using the impressed system. The impressed system is restored at the end of each month. Okay. Which amount restores the interest at the end of a month? Literally the amount of money you used minus the amount of money you earned is the interest system. Okay, let's look at what the question says. Interest amount less the total of vouchers received. Amount left in petty cash less the total of vouchers received. Bro, oh my god, this is so long. I don't like to read the MCQ answer for this. What did I just say? That yeah, the amount you spend and then subtract the amount you receive. So basically, like the net amount you spend. Okay, like the net amount, the amount that leaves your what? Leaves your petty cash balance. Okay. Now, yeah. Okay. Fine. All right. Okay. Okay. We're gonna get to it. We're gonna get to it. Don't scream, guys. It's okay. So the amount left in petty cash less the total of vouchers received. No. No. The total of vouchers received. Vouchers received is basically like every time you. I think it was like every time you wait a second. I'm not sure if it's pay or receive. Oh yeah, every time you pay someone, you receive a voucher or something like that. Wait, what the heck? Interest, interest amount. Let's say total vouchers. Is the answer C? It's D. Total of vouchers received. Oh, okay, okay, okay. Yes, it's D. Okay, that makes sense. Well, basically, the vouchers received is the amount when every time you pay someone something using your impressed using your petty cash book, you get a voucher. And the reason we're not looking at the amount left in petty cash because we don't care about what's left. We care about what we spent. You could say that if you take interest amount minus the amount that's left, then that's also gonna give you the amount that should be restored. Okay, but the question doesn't include that as an option. So the total amount you spend by the meaning the total of vouchers received is gonna be the total amount that you have to restore. Okay. In our case, we don't seem to have received any money. So our total amount spent, which is the total of vouchers we received, is gonna be the amount we have to pay to the petty cashier to restore the interest amount. Does that make a little bit of sense? It is getting very hot over here. Oh my god. I opened the fan, but I think it might bring some background noise. That makes sense. Or HD vouchers received is expenses. Yeah, it's kind of expenses. Uh, you don't swear. Yep, I don't swear. I'm good boy. I'm acha bacha. What? I don't. Is what's up? Can I finish my accounting course in 3 months? If you're smart, yeah, exactly. If you're dedicated, you don't need to be smart. You just need to be dedicated. Yeah, it is possible. It's easy. Okay, let's go next MCQ. Yeah, exactly. See, it's easy to do everything, but you just need to do it. Okay, nothing is impossible. You just need to be super duper cool. Okay, one more bite. Guys, you guys have been studying for years. Okay, don't say I did mine in 15 days. Okay, moving on to the next question. This is another eighth question. Wow. Okay, anyways, Bro, if you don't have a tutor, you should get a tutor. Like if you're doing privately and you're with, if you're not with school and you're doing it privately and you don't have a tutor, then get a tutor. Okay, not necessarily. Yeah, exactly. Your exam is in 4 months and you have done nothing. And these people have been studying for 3 years and their exam is tomorrow and they're still studying. So my point is that you need to study so that you should really get a tutor. Okay, you see that? Big brain. Okay. Iceberg. Okay, anyway, back to the topic, guys. Sarah sold goods on credit to Zafar. So Zafar is a credit customer, and Sarah is a supplier. So, oh, sorry, yeah, Sarah is a supplier, and we are Sarah. Let's say we sell goods on credit to Zafar. We're gonna debit our customer account, debit Zafar, and we're gonna credit sales account. And yeah, the answer is A, right? Yeah, there we go. That's not even difficult. And then let's move on to this question. These are some questions I got from the hard questions thread in the accounting chat. Ready? Okay, bet. So let's look at this question over here once again. It says that Sarah sold goods on credit to Zafar. So let's just assume that we are Sarah, okay? And we go like sold goods on credit to Zafar. So how are you going to record it? You're just going to debit sales. Oh, sorry, you're going to debit the customer because like Zafar is the customer. And then you're going to credit sales. Every time you make goods, you sell goods on credit, how do you record it? You simply credit sales and you debit the customer. Okay, that's exactly what's happening. Does that make sense? And the answer is credit the sales account and debit the Zafar account. Super cool. Sales account, bro, not sales ledger. Look, let me explain you the basics of ledgers once again, Uncle. We have three ledgers. Okay, we have our sales ledger, we have our purchase ledger, and we have our general ledger or like the nominal ledger. Okay. In the sales ledger, we have credit customer accounts. And in the purchase ledger, we have credit supplier accounts. And in the nominal ledger, we have every single other account. Okay. Does that make sense? Except for like cash and bank, because there's cash book for that. I know, right? Okay. So very easy. Hmm, debit. Also, there's literally no other option for debiting Zafar account. This is the only correct option. How did you mess it up? Journal, there's seven journals, but none of them is relating to what do you call it? They're not part of double entry. Like ledgers is double entry. Journals is this books of prime entry. Okay. Yes, the answer is A, Mr. Green. Okay. Anyways, moving on to the next question. 31st December, John had net assets of 2000 and capital of 20 of 2000 as well. Okay. What's net assets? It's another word for working capital. It's basically current assets minus current liabilities. Okay. On 1 January, goods costing 140 were sold on credit for 220. What was the effect of this transaction on the statement of financial position? Goods costing 140 were sold on credit for 120. So you debit your customer or like debit credit sales, debit trade receivables and stuff. So you debit an asset account basically, debit trade receivables by 220 and you credit your sales by 220 and this is increasing our assets by not by 220 because we already have 140 of those assets, you know. So it's only increasing the assets by 80 and it's increasing the capital by 220. Really? Is it? Because like your sales increase and then your profit. No, no, no. Is it B? I don't know the answer. Oh my god. I got this. Wait. I might be able to find the answer. Where can I go? What is this, bro? Maybe if I go here, then go here, go here. I hope there is the answer, bro. Guess what? I'm pretty sure there is the answer. There we go. None of the sure goods sold for 220 how it's increasing by 80. We have 140 of those. Yeah, exactly. We had 140 and then we sold it by we sold it for 220. So how much do you actually earn? You get 220 assets, okay, but you already had 140 assets before. So your assets only increase by $80 here, okay? They don't increase by 220, you understand? Yeah, exactly. Okay. At first, some of the options seem correct. Goods sold for 220 were bought on credit so far. Okay, 80% increase in capital. Profit increases by 80. Yep, exactly. Okay, that makes sense. So, when you make sales and the cost of the good was $140, how much profit did you actually make? You made $80 profit because, you sold it for $80 more than its actual cost. And $80 profit means $80 increase in capital. Crazy, right? Which means the answer is B. What is this? Question number 9. We'll talk with you later today. What I did is letters, daybooks, debits, credits, trial balance, yearly statement, calculate. Okay, you did a bunch of stuff. That's very cool. Yeah, sure. You can talk with me later, bro. It's all right. Sold on credit, so it's trade receivable. Yes, and it's also trade receivable because they did not tell us any customers, like specific customers' name. So we just do trade receivable. You get it? Okay, moving to the next question. Oh no, did I join? Oh no, no, no. Okay. Anyways, all right. Then let's do this. Yep, over here. The next question. Owner of a business took goods for his own use but forgot to make an entry in the accounts. It's very simple if you think about it. Okay. Well, when you take goods for your own use, you simply debit drawings and credit purchases. Yeah. But if you did not record this, then your drawings is overstated. Sorry, your drawings is understated, meaning your capital is overstated. And if you don't reduce your purchases, meaning your purchases is overstated. So your cost of goods sold is overstated. And then your gross profit is understated. And then your profit for the year is understated. And then your capital is understated. So before your capital was overstated and now your capital is understated. Your profit for the year is understated, so it's C or D, it's not A or B. And then capital employed, what's the formula for capital employed? Uh, was it profit for the year over capital? Okay, non-current assets minus current assets, or equity plus non-current liability. So in our case, bro, wait, throat. Okay, anyways, average capital is capital employed. Really? No. ROC is profit over capital employed, but capital employed is non-current assets minus current non-current asset. Capital employed is total assets minus current liabilities or equity plus non-current liabilities. Okay. Though over here, really, I don't think so. Capital employed, yes, exactly. Capital plus non-current liability, like it's equity, so capital. So yeah, this is overstated first, and then it's understated later. So the answer should be C, no effect. Let's just look at it. Where is it, bro? Then over here, somewhere here. Yep, there we go. 500 is added to the capital, 500 is subtracted from the capital, so no effect on equity. And what's it? The profit for the year is understated. We didn't write the final answer, but he explained it. So yeah, formula for capital employed. Yeah, so equity plus non-current liabilities basically. All right, then let's move on to the next question. This makes sense, right? By the way, our capital was first overstated because we forgot to record drawings, and then our capital was understated because our profit was understated because we you know, forgot to reduce our purchases? The answer is in fact C. Okay, very nice. Then let's move on to the next question. Let's just clean this up a little bit. Wow, congratulations, I'm there. Then let's just go through this. Jamal provided the following information for March, his first month of trading. During the month, overpaid a supplier and did not make any further purchases from the supplier on Mars. What were the balances on the purchase ledger control account? Oh dear. So overpaid a supplier, meaning that the supplier owes us money, and the supplier owing us money is kind of an asset. Okay, and assets come on the debit side. So the debit balance will be this 94. Now let's calculate the credit balance. Let's just make our purchase ledger control account. Since it's the first month of trading, there is going to be no opening balance, and credit purchases increase the amount we pay to our trade payables, so 9,100 on the credit side. Then returns reduce the amount we owe them, so 322, and payments also reduce the amounts we owe them, so 3538, 5358. And then we're just going to do balance CD for the $94 because we have to bring the PD for the next month on the debit side. And we're going to have another balance CD somewhere here. Now let's calculate how much that will be. We're going to do 9,100 plus 94 minus 322 minus 5358, which gives us 3514. Now, if we go to the next month, do some totaling, and then we have balance BD 3514 on the credit side, and we have balance BD 94 on the debit side. BD 94 and then 3514. So the answer is D. And there we go. Let's move on to the next one. Jimmy made credit sales of 98,550 in each years 2021 and 2022. In 2022, trade receivables turnover was exactly 2 days shorter than it had been in 2021. This is a fancy question, and like a few days ago, someone asked this in the accounting chat, and like I was planning to help, but then it was a long question, so I just like stopped. But then I asked my friend, who like got more than me in the CIEs, like we did it together, like my classmate, you could say, and he explained it in like one line, okay, but his explanation did not make sense to me, okay. So I'm gonna just explain it my way, the long way, the nice way, the simple way, okay. Right. So in both years, 2021 and 2022, our credit sales is 98. You guys are there, right? It's like there hasn't been a single message. Is my internet closed? Okay, okay. Yeah. So 98550 is our credit sales for both years. And in 2022, the trade receivables turnover was shorter by 2 days than it had been in 2021. So let's assume that 2021, the turnover was like 7 days. And in 2022, the turnover is 2 days shorter, so 5 days. What was the change in the total trade receivables? Now, how do you find your trade receivables turnover? You simply do credit sales, sorry, trade receivables over credit sales times 365 is equals to 7, and in this case equals to 5. Or, and we have the same credit sale for both of them, okay? So let's just kind of do that again. So trade receivables over 98550 times 365 is equals to 7. And in this case, it's going to be trade receivables over 98550 is equals to 5. What should I do now? I don't know how to do algebra. Should we multiply it by 365? That's gonna give a huge number, like a very huge number. Okay, and then we can maybe like divide it by, I know, right? But like I used to be good at it because like I used to like when I used to study for maths because I gave maths with IGC like my IGCSE, right? But then I finished giving maths and then I forgot maths. Crazy, right? Because like yes, let's look at Uncle's explanation. 40. Uh, 38. Okay. What? Did you just assume the trade receivables yourself or what? Or like, okay, you wrote X and then you got the values later? Multiplied by 365. What? Okay, you didn't show full version. Numerators are X. Uh, okay, you found those. Okay, well, anyways, let me just try doing it then. So we're simply gonna do 98550 times 365, and then we can divide this by 7. Do we divide it by 7? Why did I divide it by 7? 98550 times 365. And then we get a ridiculous, we get a huge number, very huge number. Trade receivables, what? I don't know what I'm doing, guys. Yes, somebody has to explain this algebra to me. Off topic, gonna be bring the 355 to the other side. Smart. Okay, so we just do trade receivables over 9550, and then we can just do this 7 by 355 like that. And then can we do cross multiplication? 98550 times 7 divided by 365. This gives us 1890. And then we can just do the same thing again. This is 5, 98550 times 5 divided by 365, 1350. So in one case we have 1890 and in one case we have 1350. Let's check the difference between the two 1890 and the answer is 540. And this is for year 2, 2022, and this is for 2021. The amount decreased from 2021 to 2022 by 540. The answer is C. And Uncle explained it nicely over here. But I think Uncle used stars, so it kind of did the stylish font thingy. It's okay, bro. Should I explain it again, guys? I can probably explain it again better. Should I? Wait, how many questions do we have left? We have like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. Guys, I don't think we should. Yeah, exactly. We have a lot of questions left. Should I repeat this question? Because one person did not understand it. Okay. The following ratios have been calculated. Oh dear, I remember doing this myself. Like I put this question myself in the hard topics, hard questions thread. I forgot my answer though. Anyway, I did it like a year ago. Haha. What explains these changes? The profit margin increased by 5% and the return on capital employed reduced by 3%. The return on capital employed is profit for the year over capital employed, and profit margin is basically your, what's it? Profit for the year over sales. Is that it? Profit for the year over sales is 20%. So if our selling price increases, our profit margin will increase, okay? It doesn't matter by the number of sales we have, it matters by our selling price, okay? Or if our costs reduce, then our profit margin will increase, okay? All right. And then profit for the year, it increases if you have more sales, it increases if you have a higher profit margin. It doesn't necessarily have to increase if you have high profit margin. It's going to increase if you sell more units, okay? And then capital employed, we'll look at it. Capital employed relates with drawings, by the way, because like equity, if you take more drawings, it's going to reduce capital employed. Okay. Oh my God, this is so confusing. Profit for the year has increased and a long-term loan has been repaid. Oh my God, I don't like this question. I don't know what the answer is, to be honest. I don't think I wrote the answer. I don't share the answer. I only share the question so then like people have the same amount of mental attack which I did, which I like did back in my day. Okay, but maybe there is an answer. Let's just look. Hopefully there is. Oh, okay. Oh, okay. No, no, there is not. Or is there? Yeah. Yep. Okay. Yep. There is. There is. There is. There is. I'm a nice guy. I think I wrote the answer. I'm surprised. Yes, answer is C. I have mentioned that. All right then. Where are we? Over here. Let's look at all of the options one by one, but let's look at our option first because we know the answer already. Profit for the year has increased and capital has been introduced. Profit for the year has increased. Oh, one way we can do is we can like, no, never mind. Okay, anyways. I'm bad at explaining this stuff. This is so sad. Okay. Oh, if you introduce capital, your capital employed, this thing will increase, and then your like let's just say that in year one this was 100,000. Grow must drivers. This was 100,000, and then in year two you introduce capital. This becomes 200,000. So your profit for the year stays the same. Let's just say it's not. It doesn't increase by a crazy amount. It only increases by 5%. But your capital doubled. Your capital increased by 100%. So in this case, like this is just an example by the way. In this case, of course, your return on capital employed will be lesser because it's going to be lesser because your denominator is much greater, and that's how we can say capital has been introduced. If you take drawings have been increased, then it's going to reduce capital employed, and if capital employed reduces, then the return on capital employed should increase. It shouldn't decrease. Okay, so A is not the answer. And then for B, gross profit has increased but profit for the year has decreased. This means that we have like profit for the year has decreased, but we cannot say anything that like we cannot prove that gross profit has increased. Okay, we can only prove that profit for the year has increased. The question says it has decreased, but we can literally see that it has increased. The margin has increased, and we don't have any information about gross profit, so we shouldn't talk about that. So again, B is wrong. And then for D, profit for the year has increased and a long-term loan has been repaid. The same logic as part A. If a long-term loan is repaid, then your non-current liabilities will reduce, and your capital employed will also reduce. So your return on capital employed should be even more, but it isn't. Okay, it's lesser, meaning the answer is not D. So removing A, B, and D, we are left with C, and I hope that explains a little bit of it. We're doing a bunch of papers. We're just doing questions people send. Does it make sense, guys? Okay, then. William is a trader. He has received an order from James to supply goods on credit. And okay, this is which principle is this? Recognition? What's it called? Like, you mean you somewhat understand or you somewhat somehow understand? Yeah, realization principle, right? Right. So it says that when the legal title of the goods go from the supplier to the customer, but then it also says that when the goods are literally physically delivered to the customer, okay? So wait, sorry, when the customer is uh what's it called, legally liable for the product or something. Yeah, that's the thing. Like in some definitions or something, It says when the customer is liable for the product, but then whenever there's a question in the, yeah, exactly, the answer is B. Uh, yeah, when the goods are delivered, realization, revenue recognition, recognized when it is earned. Okay. So it doesn't matter when the order is made or when you receive money because the goods are still with you. So they're not exactly the customer's goods until the customer gets it. Okay. And that's why it's when the goods are delivered, and that's why the answer is B. Okay. Yep, exactly. Please remember that. It's a very, very bad place to lose a mark. Like it's a very stupid mark to lose. Okay, Samuel started business on 1st January 2023, bought two delivery vans. Let's go, depreciation. Okay, bought two delivery vans for 12,000, depreciates all vehicles at the rate of 10% per annum using straight line method. He sold one of the vans and replaced it with a larger one costing 24,000. What was the balance on the provision for depreciation account on 2024? Okay, calculated monthly. Okay, remember that. That's a keyword. Calculated monthly means it's gonna calculate every month. One out of one. Capital expenditure, revenue expenditure. Two delivery mans. Okay, guys, back to the topic. So we have the first delivery man 12,000 and depreciating at 12%. We buy it on 1st January 2023 and we sell it on 1st April 2024. Okay, well, we have to calculate depreciation for both of them and then we have to calculate depreciation for the larger one as well. Okay, fine, easy. So it's 10%, 12,000, 10% is 1,200 per year, which means 1,000 a month. Oh, sorry, what's it? 120 a month. What? Is it 100 a month, right? 100 a month, okay. No, we cannot. Like, you need to understand it. Okay, anyways, so 1,200 a year depreciation and then 100 a month from 1 January to 1 April 2024. Okay, that's 1 Jan to 1 Jan 2024, and then 1 Jan to 1 April. So this is 12 months, like a whole year. And then this is January, February, March, and then like that's 3 months. So 300 per vehicle, and then this is gonna be 1,200 per vehicle. So we have 1,500 per vehicle total depreciation per van, and the total will be 3,000 for both vans so far. And then we buy a different van, and we want the depreciation at 31st December. Okay. So for one of these vans, the depreciation continues all the way for till the end of the year till 31st December because we only sold one of the two vans. Okay. So yeah. So for van A, let's say the depreciation is going to be 2,400, and then for van B, it's going to be 1,200 plus 300 for the for the 3 months of the next year. So that's 1,500. And then van C, which is like our big van, big van C. Over here we have 24,000, which is the cost, and then 10% of 24,000 is 2,400, which is per year. Okay, so it's two. How much is it? 200 a month. 200 a month, and then we have the month of April, April, May, June, July, August, September, October, November, December. We have 200 for like 9 months. So 200 times 9. This is giving us what, 1,800. Now we just add all of these three depreciation, and because land B is disposed, the depreciation is minus. Oh my God, smart. Yeah, it's okay, bro. Man can also be depressed. No, that's a bad joke. Uh, just do per year and then do ratios per months. Yeah, see, like there's always shortcuts, but then for some reason I do not use them usually. I use very long way, which is not nice. Uh, okay, guys, focus. All right, well, so yeah, let's try to calculate all of this. But then, like Uncle said, when we sell van B, the depreciation is cancelled out. We studied this in depreciation chapter. You know that when you dispose of the non-current asset, you have to reduce its, you have to remove its depreciation as well to kind of check if you made a profit or not. So you know, what's it, transfer the depreciation to the disposal account. Okay, 2,400 plus 1800, 4,200, and the answer to this is B, which is I'm pretty sure correct. Let's still just check. It does make sense, right, guys? Right, ice beer. So answer is B. Okay, that makes sense. Very nice. Good to hear. Uh, mm, who is Uncle? Okay, I thought it was Uncle, but Uncle did not actually help. Uncle was sending the big help message, but like, Uncle help. Okay, anyways, so he will be. Where is he? It will be. Okay, well, anyways, I think I'll just move on. We did some. Oh my God, there is still so many questions. Okay, guys, I'll kind of speed it on now. We're gonna take a break in 15 minutes, by the way. Which transaction will increase both assets and capital by the same amount? Let's do this. This is gonna be our 16th question. Okay. Increase both assets and capital by the same amount. Let's look at all of the answers. Option A, a credit customer settled his account after deducting a cash discount. Over here, we just debit cash, debit, discount, credit, trade receivables. Okay. Over here, the capital is not affected at all because it's not affecting profit or sales or anything like that, drawings or anything. It's literally just affecting assets and an expense. Okay. So the answer is not A. And then we have B, option B, which is goods were sold for cash at a price higher than the first price. So let's look at this. When you sell these, you're just gonna debit your what's it for cash, right? Okay, so debit cash, and you're gonna credit your sales, and the assets difference is your old asset, which is like the inventory itself, maybe like the cost of the inventory. So let's just say like $140 because I'm using 140 and 220 because that's literally an example we just did. And these two questions are very similar, like they're literally the same thing. Okay. So 140 was the cost, and then we sold it for 220. So our cash increased by $80. And then over here again, the cost was 140 and we sold it for 220. So the profit we earned is 80. So your assets are increasing by 80 and your capital is increasing by 80. Why is capital increasing? Because you make sales, so you make profit, and then your capital increases. Okay. Assets will not. Will assets reduce? One second. Since there's a cash discount. Yeah, exactly. Assets will. You will like not get full assets. You will. Uh, they're gonna be an expense as well. Okay, should we move on to the next question or should we look at the other options as well? Okay, rent received. No, guys, no Roblox.
Rent received included an amount prepaid for the next accounting period. Again, this has nothing to do with your capital. This is just gonna reduce your cash and then increase your gonna reduce your cash asset and increase your prepaid expense asset. It's not gonna affect your capital because like no profit, no drawings, nothing affected. Okay. The owner repaid a business loan from his personal bank account. Over here, it's affecting liabilities. It's reducing your liabilities and it's increasing your capital. Okay, it's not affecting assets. Like you get bank balance fine, but then you literally use that balance to pay the liability. Okay, so your liability reduces, your asset doesn't change, and your capital increases. Okay, so that's why it's not D, and the answer is B because B for Batman. Okay, which errors would be revealed by the preparation of a trial balance? Let's look at all of these errors. Credit purchase is 240, entered as 420 in both the purchase account and the trade payables account. If it's entered in both of them like that, then like the debit side and the credit side, they're gonna be both equally wrong. Okay, so the error will cancel each other. The error will cancel out. Okay, since the debit side and the credit side are both the same. Okay, they're both wrong. There will be no difference on the debit or credit. Then for the second one, credit sales entered as 96 in the sales account and 69 in the trade receivables account. Now over here, there's going to be a difference on the debit side and the credit side of the trial balance. So the trial balance will reveal this error. Purchase of motor vehicle 15,000 entered in the motor vehicle repairs account. Motor vehicles, like which is an asset, comes on the debit side, and motor vehicle repairs, which is an expense, also comes on the debit side. So on the trial balance, the debit side will be the same. It's not going to affect the trial balance. It's not going to stop the trial balance from balancing. It's going to be the same. Okay, you get it? So it's not three. And then for four, wages paid 1050 debited in both the wages account and the bank account. Now over here, this is a problem. The bank account should be credited. Since like there's two debits and there's no credit, the debit side will be overstated. And then the trial balance will be like, hey, this is not nice. And then you're going to be able to find the error. Okay. So the answer is two and four. I hope that makes sense. Let's go to the next question. After the preparation of our income statement, Emma discovered the following errors. A debt 1,500 should have been written off as irrecoverable. So let's just write that off as irrecoverable. We're going to write it off as an expense. So our draft profit is 35,000. 35,000 minus 1,500, which is like what, 33,500, I think. And then no adjustment had been made for rent prepaid by Emma of 2,800. When you pay rent in advance, what do you do? Wait a second. For rent prepaid, yes, exactly, it's prepaid rent. Does it affect your profit? It is rent paid for the next year, okay? And if you did not make an adjustment for it, it basically means that let's say I paid 5,000 rent, okay? But not all 5,000 belongs to this year. Out of this 5,000, what's it? 1,200 belongs to this year. Let's just make it 4,000 then. And then 2,800 belongs to next year. Yeah, okay. That's correct calculation. So 1,200 belongs to this year and then 2,800 belongs to next year. But I did not make any adjustment. I put in the income statement the entire 4,000. This is wrong, right? Because like I'm recording next year's the prepaid expense in this year's income statement. So I need to subtract that. But I did not subtract that. If I subtracted that, what's gonna happen if I subtract that? My profit will increase, right? It would increase the profit since we are subtracting it. Look, right now we recorded the expense as 4,000, but the expense is actually only 1,200. We should do 4,000 minus 2,800. Why? Because this 2,800 relates to next year. It's prepaid. Okay, so we subtract prepaid. It would not decrease the profit. It will increase the profit. It's prepaid, you subtract it. Now what's the actual expense? The actual expense is 1,200. This is the expense that should be recorded in the income statement, but this is the expense which you recorded by mistake. So you overstated your expenses. When you correct the error of overstating your expenses, meaning you reduce your expenses, what's going to happen? If you reduce your expenses, your profit will increase. By how much? You're reducing your expenses by 2,800. So your profit will increase by the same value. So do 33,500 plus 2,800, and that gives us 36,300. The answer is C. Okay, clear? A debt written off should have been written off as irrecoverable, okay? Meaning that, one second, that give me a second, I'm eating noodles. Okay. A debt 1,500 should have been written off as irrecoverable. Now tell me, what do you do in the income statement when you write off a debt as irrecoverable? Like, what's the double entry? You debit bad debts and you credit trade receivables, right? When you credit trade receivables, it has nothing to do with the income statement. It's an asset. But when you debit bad debts is an expense. It's going to come in the income statement. So your income statement should have an expense of 1,500, but it did not. You overstated, like you understated your expenses. You should have had the expense, but you did not have it. So now when you do record the expense, your profit will decrease, right? So you take your draft profit, the profit before the error. Yes, exactly. Profit was overstated by 1,500. So to fix this error, you reduce the profit by 1,500, and that's going to give you 33,500. No problem, bro. All right, then let's move on to the next one. Limited company provided the following information. What were the retained earnings? We don't have non-current assets and retained earnings. We take our retained earnings, by the way, is basically your like profits accumulating. Okay. Wait, what is this, bro? This doesn't make sense. Okay, I think it does make sense. We can find our equity from this, right? And then 5% debentures is a non-current liability, so just keep that out of the way. And then ordinary share capital. What? Wait a second. I can't use my brain. Where do we use retained earnings? Okay, I think we have to do algebra over here. Let me use my brain. Let's just clean this up. Or let's start from here. This is gonna be our, like, I don't know, maybe like 17, 18. Let's just say 18th question. Okay, anyways. So we have our non-current assets, and then we have our net current assets. Net current assets means current assets minus current liabilities, and debentures is a non-current liability. We can find our capital over here, by the way. We can find total equity over here. We can find capital employed as well, but we need retained earnings. What's the formula for equity? We have our share capital, and then retained earnings, and all that stuff, right? Hmm. Come on, man. What? I can't think of this. What? How do I do this? Okay, I should probably use my brain a little bit more. Wait, I think I'll do the calculations first, and then if I get it correct, I'll try to explain it. Okay. So let's just first try to find capital. We're just gonna add the non-current asset plus net current asset, 1,000, subtract liability. So our capital, or like we could say capital, yeah, is 55,000, and then we can add our share capital inside this. What am I doing? This doesn't make sense. Yes, net current assets is current assets minus current liabilities. Assets equals to capital plus capital equals to assets plus liabilities. So it's assets plus liabilities, capital plus assets. Hmm. Sick. Oh, oh, oh. I think get it. Let's say 35,000 plus 30,000 minus 10,000. 55,000 is capital, and then 40,000. Yep, there we go. Easy. All right. So you guys have heard of the accounting equation, right? You know, like that one chapter we have named chapter one, and then you have this equation called assets equals to capital. Oh, wait, what? It's like if you rephrase or something to the equation, you get like capital equals to assets plus liabilities. All right. So over here we have our assets, non-current assets, and then we have our current assets minus current liabilities, and then we have our non-current liabilities. Okay. Wait, what? Capital is assets plus liabilities? Really? Oh, yeah, I think it is. It's not? Oh, it's not, right? What? Assets minus liabilities, right? Ah, yes, yes, that makes sense. Yeah, because I did that in the formula, but then I'm like, what? Is this the equation? Because did I do the formula wrong and then get the correct answer? Okay, anyways. No, no, I used it correctly in the when I was doing the calculation, but then like when I was writing the formula, I just messed up. Okay, anyways. So yep, we have our current liability is already subtracted for us, so we can be happy about that. And this is 30,000, and then our non-current assets is 35,000. So we can just add this, and then we can subtract our non-current liabilities, which is 10,000. Now, when we do this big maths, we get 55,000, which is our capital. Capital slash equity, both are the same thing. Okay. Now over here, I was thinking I was doing something right. I wrote equity equals to share capital plus retained earnings. Okay. We have our share capital and we have our equity. If we have 55,000 is equals to 40,000, which is the share capital, plus the retained earnings, which we don't know. We can find retained earnings, right? 55,000 minus 40,000 equals to retained earnings, which is 15,000. Sweet. Sweet. There we go. Easy, right? You guys understand? Should I explain it again? Bro, that's not what net assets are. How did you even come up with that? Sure, I'll charge $500 per hour, but then I can't guarantee that they let me in the exam hall. And if they don't, then like you still have to pay me because like my time got spent. Okay, if you understand it, it's good. I think threshold's low because people don't understand accounting and they think accounting is about memorizing and they try to memorize formats and then in the exam they get stressed and then they fumble very badly and then they go like, oh my god, I got a C like that. It is low. It's low. It's like super low. Like bro, if you get 43 out of 143, it's gonna be a C. Literally, look at this. If we go 0452, come on, my keyboard is not working. Okay, it's okay. 0452, maybe like what's it? May June 25. Oh my god, we can do target threshold. We can just open this and look at this. Look at this. If you get 40 out of 143, you get a C. Can you imagine people get a U in this? That means that they sleep on their paper and like they just do not do the paper. How is the same? How much do you get in your paper two? How much do you think you're gonna get? Exactly. Like it's too easy. Guys, if you're saying this is high, I want you guys to see ESL thresholds. So I got a B in that subject. 0450, I think. No, no, no. What was it? 0510, right? Like what was that, bro? I don't like ESL. See this? This is what you call a high threshold, bro. Lose 8 marks and you lose the A star. Well, what the heck? In accounting, you have like you can lose 40 marks. Okay, that's a lot of marks to lose. Yeah, if you guys get 80 plus in paper two, then you get like 30 in paper one. Boom. Exactly. What is this? Yeah. Almost all languages are high. By the way, I think I should show you guys Arabic. I got an A in Arabic. Is this Arabic? Yeah. I'm surprised I got an A, to be honest, because I did the exam so badly, but I got an A in Arabic, which is very cool. I was ready to accept a C. I would like happily accept a C. Urdu is also high. Oh yeah, I lost 2 marks in maths. I lost 2 marks to my A star. I think I should show you guys my script. I don't know where my script is though. Might be able to find it somewhere. Oh, by the way, we are on break, okay? Like we're on a short break. That's why I'm yapping and stuff. Okay. Maybe if I go like this, and then maybe like script. Oh, come on. Then maybe if I go like max. Oh no. 0580. No. Come on. My name maybe. No. Okay. Wow. This is not nice. Maybe I should check on my phone. 20. I got an A star in Urdu and no, don't expect an A in accounting. That's sad, okay? Don't expect A. Aim for A star, Urdu is easy. Okay, well, surprisingly today we have a few more people. Like in our paper two session, oh my god, we had like two people attempting, bro. What? Okay, guys, I think I should show you guys this, right? You might pick me out for IGCSE for this, right? But this is what I can't even open this book properly. Come on, what is this? Oh my god. Why is there this huge black screen, bro? Okay. All right. Anyways, yeah, you guys should look at this, right? Okay. So this is basically something I'm building. Yeah, it's very cool. Okay. So where is the description? Oh my god, I cannot find the description. Anyways, so let's just say you guys are exams, okay, and then you want to find a tutor or a teacher. So you come over here and then you go like this, and then you find the tutor, okay. And then like if you're a very smart student and you want to teach people, you can just apply as tutor, and then you can like go take the form, and then you can fill the form, and then we will give you money. I mean, like we won't give you money. You're just gonna get money for teaching, you know. Like just it's just that we get you students, okay. That's the only difference, and it's very cool. And then yeah, if we get a bunch of more tutors and a bunch of more students, it's gonna make me very happy because then I'd be able to earn money. Yes, apparently I earn as well, and then you guys earn as well. Who got a U in accounting? Oh, yeah. You said you got into university right after university, after IGCSE. I am very shy. I cannot tell you what university I went into. I live in Saudi Arabia. Do you want to still know? Like, will you come to Saudi Arabia if I tell you what, which university I'm going to? Oh yeah, smart guys. Follow me on my Instagram. You can just follow me. Yes, very cool. No, we only have 3 minutes left for the. Oh, we have 3 minutes left for the break to end. By the way. Oh no, my AirPods battery very low. I'm not gonna get banned. Trust me. It's not like I. Hopefully I won't. I mean, like, it's not like they're. It's not like anybody's uh, moderating this, right? Right. I'm not from India. I'm from Pakistan, and the place is Saudi Arabia. Saudi Arabia. Like KSA. Hey, no, don't ping them. I'm scared. I'm from Pakistan, bro. Trust me. Oh my God, what is wrong with you? I still jealous. I still don't be jealous. Ah, shit. No, I don't get paid for it. But then I do crazy stuff, right? Like, I'm just having fun right now. And then, like, I'm also advertising something, right? Which I probably could get banned for if they see it. I hope they can see it. What? This. Oh, by the way, there's a problem with this. Like, like anybody who's joining, uh, they don't get the member role. Okay, they're getting it now. Very nice. The problem is fixed. Okay. Okay, okay. Guys, do any of you do crazy stuff? Like, I don't know. Like, what cool stuff do you guys do? Yes, what cool stuff? Like, I don't know, like, let me think. Okay, basically, let me just get to the point, or maybe they're gonna actually ban me for this if I talk too much about it. I don't want to get banned. No, I meant like useful stuff, like skills and stuff. Like some people code, some people are building platforms, some people, uh, I don't know. Like right now, for the platform I'm building, I want developers because the bot we have and the website we have is vibe coded, okay? But then I don't know a lot about web development, so I want someone to do it for me. Cool, right? By the way, watching K dramas is not the right way for it. Okay, guys, we have 1 minute left. No, we should just take a deep breath, and then we should all join the server in my link in my profile, the server link, right? So you can just open my profile and then you can just scroll down and oh my god, there's an invite link. You click on that and boom, magic, cool, right? You guys can follow me for more magic. I please know half the stuff. Yes, exactly. Wait, no. We're starting now. It's 10. Yeah, I'm also learning Japanese, watching anime. I go to people and I say, Kaizi koni ore wa naru. Okay, back to the topic, guys. Let's continue because 10 minutes have been up. And yep, I am 13. You're 13, bro? Jim, I think 13. That's crazy. Wow, tough. W, I guess. Why are you giving IGCSE so early? Shouldn't you be in 8th grade or something? Wow. I'm not old, I'm just not interested. Okay, okay, bro. That's the excuse old people make. All right, guys, let's continue. Let's go here. And where is it? Where did we stop? We finished all of these? No, we did not. We finished the limited company, right? Okay. Okay, then. The financial year of a club ends on 30 September. During the year ended 30 September 2022, the club received an interest-free loan from a member. So, one second, let me just turn on the status. Okay, there we go. Okay, 25. Wait, why am I writing 25? We have the 19. 19. Okay. 19th question. Financial year of a club ends on 30th September. The club received an interest-free loan. Okay, all right, well, so if you receive a loan, it has nothing to do with your income and expenditure account because that is, related to the incomes and expenses. And since this loan is an interest-free loan, meaning there will be no interest expense on it, since there is no expense, it doesn't come in the income and expenditure account. Income and expenditure account is, by the way, same thing as the income statement, in case you did not know. Wait, what? Uh, I open the questions. I open the chat here. One second. Receipts and payments account is basically the cash book of a club and of a club. So anytime you receive money or you pay money, you record it in the receipts and payments account. Okay. Okay. 1 second. Do what? Okay. And then for the second part, receipts and payments account and income and expenditure. No, because income and expenditure account, we don't put it there since it's not an expense or an income. And then the third part is receipts and payments account and statement of financial position. Since it's a loan, meaning a non-current, meaning a liability, we put it in the statement of financial position. And since we receive the money, we're receiving cash, we're getting money or paying money, it's gonna come in the receipts and payments account. Okay. So that's why the answer is C. It's not D because maybe we will record the receiving cash. Okay. So yeah, the answer to this is C. And then let's just move on to the next one. A club had an accumulated fund at the start of the year of 18,000 and at the end of the year of 16,200. New equipment was bought and the total expenses were 9550. The only income was from the subscriptions. Okay, interesting. So we have all our expenses over here and we are to find the income, okay? Which basically means that we kind of have half of the profit. So let's just use our closing capital formula as accumulated fund is the same as capital. So we have 16,200 at the end of the year, and then we do 18,000 at the start of the year. We add anything that increases the capital, which is the new equipment, and then we subtract the total expenses because that's your, what's it called? Your expenses. Yeah, they reduce your capital. And then you add your subscriptions, and then you rearrange the formula 16,200 minus 18,000 plus 1,100 plus 9,550, and that's going to get you your subscriptions. And let's calculate that. Come on, bro. What? Okay. 16,200 plus minus 18,000 plus 1,100 plus 9,550. And our answer is 7,860, which is incorrect. Crazy. What did I miss? Total expenses 9,550 and opening is 18,000, closing is 16,200. Total expenses is this. What's the total income? Did I calculate it wrong or what? 16,000? Oh, okay, makes sense. There we go. 8,860, which is still incorrect. Wait, is it incorrect? Yeah, it's wrong, right? Yeah, it's wrong. Why is it wrong? Bro, help. What's going on? Did I look? Did I mix it up? Accumulated fund at the start is 18,000 and at the end it's 16,200. Total expenses were 9,550. Okay. Uh, hmm. What should I do? We're doing this question. Wait a minute. What if Something's wrong. What am I missing? Yeah, okay, it's A. We can see that. But how? What am I doing wrong? I feel like I'm missing something now. Maybe that makes sense. It's not an income, but it does affect the capital, you know. So I was looking at it from the capital's view. Yes, but it does affect the accumulated fund, and accumulated fund is assets minus liabilities. Yeah. Hmm. Yeah, exactly. Yeah, exactly. Okay, that does make sense, but interesting. Okay, I get your point. They did not say that the new equipment is additional capital, okay? Though a club can not really have additional capital, it only earns its resources from subscriptions and accumulated funds is basically the profits accumulating. Okay, it's kind of like the same thing as retained earnings, meaning the club nobody really invests money into the club. Okay, the only earning or something for the club is like donations and subscriptions kind of stuff. Still, well, so anyways, like Uncle said over here, that when you buy this machinery or when you buy this equipment, it increases your assets and it also decreases your assets. And this is not a new thing in the club, okay? Like it's not a, what do you call it? Additional capital, okay? Because there's nobody investing this in the club. It's just the club buying it from its own resources. And that's why you do not include that. And thank you for explaining that to me, bro. I really was messing up before. All right. Yeah, exactly. It's not additional capital because this is a club and they don't have that stuff as well. And the question didn't specify as well. Okay, that's not nice, but anyways, we understood it. So let's fix the error and let's look at it once again. So 16,200 minus 8,000 plus 9550 with what? Oh, okay. There we go. And the answer is 7750, which is A. All right. Let's move on to the next one. We have a bunch of questions left still. Oh my god. My brother's gonna come in a bit, like he's gone to the shop and then he'll come in a bit. I should hurry up. Really? Okay, bro, don't worry. I got you, man. But you really had to draw that. No, it's okay. I'll repeat it. I'll repeat it in like a sentence or something. Okay, anyway, so we have this. Oh, okay. Are you sure about that? Yeah, I don't think so. Okay, a club had an accumulated fund at the start for 18,000 and at the end for 16,200. Okay. And accumulated fund is, by the way, as you know, is just your profits accumulating over time. Okay. So every time you make a profit, it gets added to the accumulated fund. Every time you make a loss, it gets subtracted from the accumulated fund. And using this accumulated fund, we buy assets and all of that stuff for the business. Okay. Though still, kind of surprising. Hmm. Okay. Accumulated fund is only your profits. Your cash and bank balance is something different. Okay. It's still it's in my head. I don't know. I feel like there's something weird with this question. But anyways, let's just explain based on what we understood and the logical ways, So this 1,100 is the equipment bought during the year, okay? And it's not any additional investment or additional capital or something like that. And that's why we do not add it to the, our closing capital formula. And then we just rearrange the formula and we get our answer. Okay, that's kind of all. Okay, move on, move on, move on. After preparing the financial statements, there are two errors. Vehicle repair had been debited to the vehicle's account, meaning the uh, expense was understated and the assets were overstated. And then for error two, legal fees had been included in expenses. So assets, legal fees, by the way, is capital expenditure. It's not supposed to be included as an expense. It's supposed to be added to the cost of the non-current asset. Were understated and expenses were overstated. Okay, ignoring depreciation, what was the effect of these errors? So expenses were first understated by 1,500, and then expenses were overstated by 2,100. So the net effect of expenses was overstated by 600. If the expenses increase by 600, the profit will decrease by 600. So the answer is B, 600 understated, which is correct. Are you there, by the way? Okay, very nice. Wait, was there always slow mode here? Okay, I think there was. Okay. But I cannot move this. Oh my god, I cannot move this. Oh my god. My screen had what? Why can I not move this? Okay, okay. Okay. Further, did not keep a full set of accounting records, purchased goods on credit terms, and all sales were made on cash, compared assets and liabilities at the start and end, and recorded the changes at the end of the year. The bank balance changed from a debit balance to a negative balance. What was the change in the capital? Wow, bro. Wow. Okay, anyways, let's do this. Question number 21. W Chinese tab. Thank you. I'm trying to sell it for 900 reals. Okay, anyways, let's do this. And I can do 899. Yeah, exactly. And now I'm struggling. Okay, haha, joking. Let's do it. The document could set compare assets and liabilities at the start and end. They're asking for change in capital. So let's just assume our starting non-current assets. Okay, amazing. I have an amazing idea. Let's just assume. Okay, we cannot use that amazing idea. Forget the amazing idea. Let's just assume at the start of the year we have non-current assets, 1,000. Yeah. At the end we have 1,000 plus 1,000, 11,000, so that becomes 12,000. Because the question said so. And then at the start we have inventory as 7,000. So closing inventory becomes 900 because decreased by 6,100. Okay. And then trade payables, we have in case, okay, so let's just say we have zero trade payables and then here we have 3,000 trade payables. Okay. Just creating a scenario here to kind of help us understand. Okay. Okay. And then here we have 4,200 positive bank balance. And then here we have negative 7,100 bank balance. Okay. Okay. And what was the change in capital? So we can calculate the capital here. This is our non-current assets, by the way. And then this was our opening inventory, which is an asset. This was our trade payables, and this was our, what's the last thing? Bank balance, right? Okay. So we have this is an asset, this is an asset, and this is an asset, and we have no liabilities at the start. So let's just add all of this up. Yeah, you can do that as well. Like I'm just trying to explain it. Like I said, I always take the long way for absolutely no reason, just to kind of make things clear. Okay. And then over here we have at the end 12,000. And then closing inventory 900, trade payables 3000, and your bank overdraft, which is a liability of 9,000, 7,100, which makes your capital quite less. Did I mess up like very badly over here? Okay, let's look at the difference. 12,200 minus 2,800, and the answer is 9,400. And it's B, bro. I just took a scenario, but you can do it without the scenario as well. Like I just took a scenario to kind of make things more clear and easy to understand. Okay, I made up a scenario using the information. Okay, so in our scenario, we calculated the opening capital to be 12,200 and the closing capital to be 2,800, and we can see that the capital has decreased by 9,400, and option B says that. So the correct answer is option B. Bro, the hard questions are in this thread. You should send them here as well if you have any. But you can make the scenarios up. Like, what do you mean? Who's gonna make them? You're giving the exam. Okay, anyways, Frankie is a partner. He has both a capital account and a current account. Which statement is correct? If he has a capital account and a current account, then he's gonna use the capital account to give himself current. Okay, anyways, uh, any loans he makes to the partnership are added to his capital account balance. No, he can have a debit balance on his current account, but not on his capital account. I mean, yes, but like we look at it, interest on drawings would increase a credit balance on his current account. No, because interest on drawings comes on the debit side. It's going to increase the debit balance. And for A, uh, any loan he makes to the partnership are added to his capital account balance. No, because in the capital account you will only add money when you invest capital. Okay, giving a loan is not investing money. Giving a loan is giving a loan. Okay, it's a liability account. You're going to make a loan account. You're not going to put it in the capital account. And then for part D, the balance on his capital account falls when his drawings exceed his share of profit. No, because if his drawings exceed his share of profit, then like maybe he has a salary or something, and it's gonna go in the current account as well. The drawings and stuff don't come in the capital account. Okay, so the answer is B, because the capital account is only like when you have a capital account and a current account. In that case, the capital account will only and absolutely like nothing else except for additional capital. Okay, so every time you invest capital, you will record it there. You cannot have negative capital investment, so you can never have a debit balance if you have this capital in current account. Okay, does that make sense? So the answer is B. Okay, moving on. Okay, Ann is a trader on 1 April. Cindy's account announced that they showed a credit balance of 520. The following transactions took place. Which statement about the balance on Cindy's account in Ann's ledger on 30 April is correct? So let's assume we become Ann. Okay, now Cindy is our customer. Wait, is it a customer? Uh, Cindy's account showed a credit balance. Credit balance means liability, which means that Cindy is a supplier of 520, and then return goods, so like purchase returns, we return goods by the way, 30, because it reduces the amount we owe the supplier, so we debit it, and then bought goods and paid in cash. So if you buy goods and then pay in cash, you just do debit purchases and credit cash. You don't really do anything with Cindy. And then what do we have to? And then you can just do balancing, just like the question asks you to balance it. And we can just do 520 minus 30, we get 490 on the credit side, and then you do balance BD. Wait, oh sorry, wrong side. We get 490 on the debit side because the debit side is lesser by 490. And then when you do balance BD, you get 490 on the credit side. Since it's on the credit side, it means it's a liability. If it's a liability, it means we owe money. We owe money to Cindy. We owe Cindy 490. The answer is A. Very easy. Uh, No, it is an art. It's cool. It's not like it just depends on you. It depends on whether you understand it or not. Yeah, that's also a reason. Yeah, well, because you do not understand things. I'm pretty sure you're trying to memorize things in accounting. Well, I have to say to you that won't work. If you understand things and then you lose marks, then you will actually understand losing your marks and then you won't lose your marks again. You get me? You know, I used to hate P1 as well because like it never made sense to me. And then like I started understanding accounting, and then I did so much paper ones, and like I used to have fun doing paper ones because you know it was quick and it was more fun. But then for paper twos, I did not do them, okay, because you have to do so much work. Like imagine like oh my god, all options are the same exactly. Yes, that's the thing. When you understand the subject or like when you understand the concepts, you're gonna know that every single of them is different. Okay, anyways, Sarah sold goods on credit to Zephyr. We have already did this. The answer was A. When you sell goods on credit to someone, you're going to debit their account and you're going to credit the sales account. Which statements about reducing balance method of depreciation is not correct? Reducing balance method, I'll just remind you guys, it's the method where we have the same rate of depreciation, okay, but different amount. The amount will reduce every year, but the rate of depreciation will stay the same. A lower amount of depreciation is charged in the early years. No, a higher amount is charged. First one is incorrect. Like that's literally the answer. Each year, a given percentage is deducted. Yes, it's used for assets with greater benefits and values. Yes, like cars and stuff. Because like in the first years of reducing balance, you reduce more depreciation. Okay, the net book value will never reach zero. Yes, so the answer is A. Very simple. The financial year of Ewing ends on 31st March. On 1 April 2021, he purchased a machine for 4,000. Estimated that it would have a useful working life of 3 years and a residual value of 100. Uses straight line method of depreciation. Machine was sold on 1 April 2022, which is exactly 1 year. Okay, let's calculate the depreciation. 4,000. 4,000 is the depreciation, is the cost. And then we have residual value 100. And the number of years 3. So we just do 3,900 divided by 3, which is like what, 1,300 a year. So the depreciation charge was 1,300. Holy, bro made a big loss. Okay, 4,000 is the cost and 1,300 is the depreciation charge. This is the value of the car, and then we sold it for 1,500. We made a $1,200 loss. The answer is B. Moving on, the draft financial statements of a limited company showed retained earnings 31H20. It was then found that no adjustment had been made for commission receivable accrued and insurance prepaid. What was the correct amount of retained earnings? Retained earnings are basically accumulated profits, you could say. So commission receivable accrued is something you will add to your commission receivables. So add 450 and then you will subtract insurance prepaid because it's relating to the next year. It's not an expense for this year. And let's calculate the final value 31 H20 minus 175 plus 450. Hopefully that's correct. 32095. The answer is C. Let's check. Is it not C? Bro, are you serious? Commission receivable accrued. Uh, Yo, Jack, what are you guys talking about? This is ending when the questions end. When owner takes out cash from business, it's debit drawings. Like why? Because if the owner is giving donations out of his own will, it's not a business expense. If it's a business expense, then you won't say owner withdraws cash. You will just say like, yeah, fine, you will say owner withdraws cash. But if it's a business expense, like if you're donating on the behalf of the business, then fine, record it in the business. But if you're donating for your own self, then keep it separate. Insurance prepaid we subtract, yes, but according to the answer, it feels like something is wrong. I don't know what's going on to be honest, but let's find out. We have a few questions left. We subtract insurance. Yes, we do, but the answer still seems to be wrong. So, so yeah, maybe let's see what happens. 32, 45. Apparently, they're adding this. Bro, I think you messed up with the mark scheme, dude. Is he there? You're there, right? Can you check the mark scheme again, please? Because yeah, well, I don't think it's D. I don't think it can be D. Yeah, please. The answer seems to be C. Yeah, exactly. That seems to be the correct answer. Did you recheck the mark scheme? Insurance prepaid is asset. Okay, well, we don't care about asset or liabilities. Insurance prepaid is an expense relating to the next financial year. Oh, wait. No adjustment had been made for the following. So when you make an adjustment for this, you reduce insurance prepaid from your expenses, yeah, and that increases your profit. Oh, okay. Wait a second. Let me just think. I think I understand it. Um, Insurance prepaid is an expense relating to the next year. Yeah, okay. Maybe they're right. And if you did not adjust for it, it means that your expenses were overstated. But then when you adjust for it, when you subtract insurance prepaid from your total insurance, your expenses reduce. And the moment your expenses reduce, your profits increase. And if your profits increase, your retained earnings increase as well. Okay. And then as for commission receivable accrued, since you did not adjust for this, you're gonna adjust for it now. You're gonna add the accrued commission receivable, which is gonna increase your profit and which is gonna increase your retained earnings. Okay. Yep, exactly. Expenses reduce. Yep, exactly. I messed up the relationships. I thought that like I don't know, I jumped to I don't know. Yeah, I did a stupid mistake. Well, anyways, so yeah, you guys understand that, right? You subtract insurance and that reduces your expenses and that increases your profits, okay? Over here, like before, I did not write expenses. I directly went to retained earnings, which was incorrect. It reduces expenses and then that increases profits, okay? Do you understand it, ZSE? All right, Tahe provided the following information for his first year of trading. It makes sense, right? Stupid mistake, right? No worries, man. All right, provided the following information for his first year. The gross margin was 25. What was the value of the closing inventory? Gross margin is 25 means that 170,000 times 25% is going to give us the gross profit. 170,000 times 20%. 42,500 is our gross profit. And then if we just do sales minus gross profit, we're gonna get to our cost of goods sold. 170,000 minus 42,500. 127,500 is our cost of goods sold. Now, since it's first year of trading, we don't have any opening inventory. Oh, come on. Yeah, net sales, I forgot. Okay. So 170,000 minus 6,000 times 25%, 41,000. Let's fix that. And then we do 41, what's it, 164, right? 164,000 minus 41,000, 123, 33,000, is that correct? Okay. 123,000 is our cost of goods sold. And since it's the first year, we have no opening inventory. Okay, so we do, this is the formula for cost of goods sold by the way, opening inventory plus purchase minus closing inventory is equals to 123,000. Let's put in the values now. 0 plus 129,000 minus closing inventory is equals to 123,000. And let's kind of just do it 123,000. Let's just do some algebra. I think I'll do like 12,900 minus 12,300. Oh, sorry, 129,000 minus 123,000 is equal to closing inventory, which is I think 7,000 or what, 6,000. Okay, so the answer is C. C hoga. C here. Okay, what were the purchases for the year? All right, thank you for attending. Goodbye. We have a few questions left. Okay, then let's speed run this and finish this fast so I can finish my noodles. I have like 2 bites left. Okay, business provided the following information. Opening inventory 6,800, closing inventory 6,000, rate of inventory turnover is 5 times. Rate of inventory turnover is cost of goods sold over average inventory, which is 5 times. Average inventory is 6,800 plus 6,000 divided by 2 over 3,700 is equals to 5. Now we can make cost of goods sold the subject, multiply this by 5. 18,000 is equals to opening inventory plus purchases minus closing inventory. And then we can make purchases the subject. 18,000 minus 6,800 plus 6,000 is equals to purchases. And let's calculate that. 18,000 minus 6,800 minus 6,000 is 5,200. Let's check our answer. The answer is incorrect. Did I mess up? Where did I mess up? 18,000. Oh, I messed up. What were the. Okay, okay. Add 6,000. Which one? Did I forget to add it? Oh, I subtracted it. Okay, okay. Thank you for pointing that out. Okay, there we go. 17,200. That's still incorrect. What did I mess up now? Average image was wrong. Really? I got 6,400. 6,800 plus 6,000. Oh, 600. I'm such a genius. 6,800 plus 6,000. Okay, there we go. Divided by 2. And that's 6,400 times that by 4. This is all incorrect. Let's just redo this. Okay. And then we can multiply this by 5. 32,000 is the cost of goods sold. Oh, 32,000. And then we can do opening inventory 6,800 plus purchases minus closing inventory. And then make purchases the subject 32,000 minus 6,800 plus 6,000 is equals to purchases. And then we can just do minus 6,800 and 6,000. Then we get 19,200. All right, and the answer is still incorrect. Let's go. What did I mess up now, bro? Are you guys serious? Okay, 1 second, 1 second, 1 second. I'll do it, I'll do it, I'll do it. Minus, there we go, minus 6,800. There we go, okay, okay. And plus 6,000, all right? Yep, there you go. That's what I'm talking about. Okay, the answer is B, easy. Did I forget another zero? What was my mistake? Okay, 31,200. Boom, easy. This is speedrun, bro. This is what happens when I speedrun. Okay, a trader provided the following information. Yep, thank you. Well, then how did I get the wrong answer? Right? Okay, anyways, what was the rate of inventory turnover? We just do the same thing. Opening inventory plus closing inventory, that's like 24,000. Uh, this is average inventory and then divide by 2, so 12,000. And then we can find the cost of goods sold. So 8,000 plus 108,000 minus 16,000 gives us 100,000 cost of goods sold. Just remove the zeros. 100 divided by 12 gives us 8.3 times. The answer is C. You understand this, right? You guys understand this code, yeah? Very easy. I got to go. Okay, bro, bet you had a fun. Okay, there we go. That's 8.3 times. It's finishing, bro. We're almost done. Just gonna finish one, two, three, four, five, five more questions, and boom. Yes. No, I won't do that much. Okay, hopefully. The owner of a business took goods for his own use. How did this affect the profit for the? How did this affect the profit in the capital? Okay, so if you take goods, uh, you have to debit drawings and credit purchases. If you forgot to do that, then your capital is understated since you forgot to do this, by the way. So your capital understated, meaning the answer is B automatically. And then we understand the purchases perspective too. If you forgot to reduce the purchases, then the purchases will be overstated, which means that the cost of goods sold will be overstated as well, which means that the what? Wait. Something feels wrong. Uh, what was the effect of this error? Oh, okay, very smart. Okay. Let's continue. So cost of goods sold will be overstated, and what happens next? Yeah, your gross profit becomes understated, and your profit for the year becomes understated. If profit for the year becomes understated, ayo, what? Okay, yeah. Capital also becomes understated. And if you do not record drawings, then capital becomes overstated. Sorry, I messed that part up. If purchase understated, cost of goods sold understated, profit understated, capital. What? It's correct. Profit understated, capital also understated. And then before, if you do not debit drawings, you're overstating your capital. Yeah, it is C. That's what I'm trying to explain. That first, you like due to the profit being understated, your capital gets understated, and then due to the drawings not being recorded, you overstate your capital. So the capital cancels each other out, okay, and the profit stays understated. Okay, profit is understated because purchase is overstated, and yeah, that makes sense. Very easy. Profit because cap go up, but drawing because cap go back down. So no net change. Yeah, exactly something like that. Okay, business bought a lot of assets for 2000 each, depreciates all of them, depreciates one using the straight line and one using the reducing balance method. Which statements are correct? Okay, I did this question back in my day as well, like a year ago, right? And then I chose the long way to explain this. Like I literally made a scenario and then I did it like that. Okay. Ah, okay. Asset X will be fully depreciated before asset Y. Asset Y uses the reducing balance method. So this is true because reducing balance method will never be fully depreciated. Okay. And for the straight line method is going to be depreciated in like a few years. Okay. So the first statement is true, meaning the answer is C or D. In 2022, on 1 January 2022, okay, the depreciation charge is lower for asset X than for asset Y. They both have the same percent at the first year. Okay. So this is false because since it's the first year, it's going to be at cost. So 2000 times 10% is equal to 2000 times 10%. Okay. So the second one is false and the first one is true. The answer is C. Moving on to the next one, Colin's cash book showed a debit balance, which is a positive balance of 2134. When Colin compared the cash book with the bank statement, he saw the following: a standing order paid in error by the bank. Okay, so we're gonna have to prepare a short bank reconciliation statement. Our cash book balance is 2134, And then we have the standing order paid in error by the bank, meaning the bank balance is lower than the cash book balance. So to make the cash book balance equal to the bank statement balance, we're going to have to add this 80 back and we're going to label it error by bank. And then you can give more details if you want to. And then unpresented checks is basically that checks which have not been debited to the bank statement, but they're credited to the cash book. So the cash book balance is lower. To make it equal to the bank statement balance, you will add these. Okay, and then uncredited deposits is those amounts which have not been credited to the bank statement, but they're debited to your bank to your cash book. So your cash book balance is more than your bank statement. To make your cash book balance equal to your bank statement, you're going to subtract these amounts. Uncredited deposits. You're going to subtract these 376, and now you can just find the answer. 2134. We had a positive balance. Okay, and we add 80. We add 563 and we subtract 376 and we get 2401, which is incorrect. Did I do some mistake? 2134 plus 80 plus 563 minus 376. What did I do wrong? Yeah. Yeah, did I do something wrong? Cash book. I'm present the church and prayer about it. Yeah, I think I did this time. Maybe I did a mistake with the error. What if we try subtracting this one also? Let me get. Interesting. So apparently they subtracted the error. To get the answer, they have subtracted the error. A standing order paid in error by the bank. So the bank statement balance is lesser and the cash book balance is more. We did not actually pay this. We did not actually record this in our cash book. Okay. The bank statement balance is lesser. To make our cash book balance equal to our bank statement balance, cash book balance is more. To make it equal to the bank statement balance, you subtract this amount, and yeah, you just change the answer for that a little bit. I don't know what I did before, but I did wrong. So now it's correct. Okay. And you have 2241. Since this is not a minus a negative amount, this means that it's a positive balance. A positive balance in the cash book means debit, and a positive balance in the bank statement means credit. So the answer is C. We do not add 80, yeah, because it's recorded in the bank statement. The bank statement is lesser. To make the cash book equal to the bank statement, you just subtract it, and boom, they're equal now. Closer to being equal at least. Okay, what is not a reason for preparing a monthly savings ledger control account to carry out a check for each entry? Yes, we do, prepare savings ledger control accounts to have, reduce frauds and check and everything. To prove that an entries made are automatically correct. Wait, oh, is A the answer? A is the answer. Yeah, A is the answer. Like I said, if it's a positive balance, it's gonna be credit in the bank statement. You know how you already know that if it's a positive balance in the cash book, it will be debit, right? The bank statement is the opposite of the cash book. Okay. So if it's positive, it's going to be credited in the bank statement. Oh my God. We have been doing this for a bunch of minutes. No problem. Okay. What is not a reason for okay. So the answer to this is A, to carry out a check of each entry recorded in the trade receivables account and in the sales ledger. This is wrong because, when we prepare control accounts, we do not make them using your ledgers and your customer accounts. Okay. We prepare them using books of prime entry. So that's why you do not have any checks on these ledger accounts and trade receivable accounts. Okay, that's why A is not the answer. Reduce fraud uh, and prove entries are made arithmetically correct and the summary of trade receivables. Those are all advantages of your control account. Okay. Trader received his bank statement. What does she need to record when she is updating her cash book? A bank error, a credit transfer, and uncredited deposit, the bank statement balance. The answer is not D, and the answer is not A because if it's a bank error, you're going to correct it in the bank reconciliation statement. If it's a cash book error, you're going to correct it in your own cash book. A credit transfer, yes. An uncredited deposit, it also comes in the bank statement, bank reconciliation statement, because you've already recorded these on the debit side of your cash book. You've only not credited them to the bank statement. Okay. So the answer to this is B, a credit transfer, which is basically like you pay or you receive money through bank. Okay. So you won't know about this till you get the bank statement. So when you get the bank statement, you have to give this to the, to the bank. You have to record this in your cash book. Okay. A trader introduced additional capital 4,000. This was debited to capital account and credited to bank account. What was the effect of correcting this error? So when you correct this error, your bank balance will decrease by 4,000 because you had, oh, sorry, your bank balance will increase by 4,000 because you had wrongly decreased. You know, when you credit your bank balance, you're decreasing your bank balance. So you had wrongly decreased it before. Now, when you fix this error, you increase it again, okay, which is correct. And your capital, when you correct this error, it increases your capital, okay? So increases and increases, the answer is C. And let's also D, what? Oh, stupid. Like the net effect is 4,000, but like when you correct the error, then you, oh, okay. Well, I guess it does make sense. Anyways, this is how it works. Yeah, exactly. But like I was trying to explain the final effect or something like that. Though I guess I was explaining wrong. Okay, let me just explain it again. So let's just take this entry. It's supposed to be debit bank and credit capital. But what we did was, you know, we flipped it. We debited capital and we credited bank. So to fix this error, we first credit capital once. Now the error effect is gone. Then we credit capital again to actually record our entry. Okay, and then same for bank. You debit bank once to remove the effect of the error, and then you debit bank again to, you know, actually record the entry. So instead of, you know, doing it twice in the entry, we can just write the amounts twice, which will mean the same thing. So instead of 4,000, we're writing 8,000. And yeah, this reduces, this like removes the effect of the error and adds the entry which you wanted to do in the first place. Okay. And yep, with that, we end our tiny session, and it's lasted from 11:30 to 2 o'clock. Super cool, right? I skipped one question actually. Which one? Can you please remind me of it? Oh, this one. Very cool. Okay. I have done this question. Uncle, which question are you talking about? And because like we finished, right? We finished all of this. Okay. I did this question. I said the answer is B. It's not A because if it's a bank error, it's by the bank. You can't change it in your cash book. You're gonna record it in your bank reconciliation statement. Yeah, exactly, exactly. Don't sleep, Bacha. Don't sleep. Or they all count. Any important topics? Just study all of just two past papers. Do all of them. Yeah, no problem. Do all of them and yes, have fun. It's all easy. Just lock in, bro. Just lock in. Wow, they're balanced. I want to keep them unbalanced. Can you give us tips for this paper? I will give you a tip that when you select an answer, make sure you understand why that answer is correct and why all other options are wrong. Okay. If you do not understand it, then that means that your concept is weak, which means that you should get it stronger. You know, you should understand things better. Okay. And yeah. Thank you guys for attending. It was fun. Hopefully, you all understood everything. Low-key bad at accounting. How much time should you finish the paper? I finished the paper in 20 minutes. I finished my exam in 15 minutes, I think, but I don't really remember for sure. Like my CIE, I think I finished it in 18 or 15 minutes or something like that. Yeah, it was kind of easy. Oh, wait, I'm not sure. Look, I don't remember, okay? It was maybe like it was 23 minutes or maybe something like that, okay? But it was less than 30 minutes, okay? That's like 30 minutes on one paper. Nah, bro. Yeah, like it's fun to, you know, fun. Yeah. You guys should just have fun doing it, okay? If you think of it like something too big of a deal, then you won't feel like doing it. And if you don't feel like doing it, then you won't do it, which is not nice, you know. So yeah, it takes me 50. Yeah, I got 34. I lost one mark. I think I know where I lost the mark, but I don't really know where I lost the mark. Oh, yeah, I remember. It was a question which was no, I don't remember. No one is going back. No, it wasn't exactly 20 minutes. Like I checked the time myself, okay? I remembered the time back then, but of course I forgot it right now. Right? It's a year old thing, but I remember that it was a good time. Okay. No, I'm happy. I'm happy with 34 marks, bro. I'm just not satisfied with my paper two marks. I got 79 in paper two. Like disappointing 79, you know. No, you're gonna get like 99, okay? Guys, have you seen Full Metal Alchemist? So cool. It is, bro. I was expecting 99. I was literally expecting 99. Good morning. Good morning when it's 4 a.m., 4 p.m. I don't know. I didn't take accounting in A levels. I'm in university. Yeah, it should have been. But like, I got 79 and 34. I got an A star, like a high A star. So I wanted a rank, like I wanted at least a regional rank, because I think I thought I was really good at it, and I was actually good at it. But I lost 5 marks in petty cash book. No, not a low A star, a very high A star. Okay, I lost 5 marks in petty cash book because I wrote the wrong details. Okay, so you know how like the question says paid taxi fare for like $5. Okay, so instead of writing taxi fare, I wrote like taxi, or I wrote like travel. Okay, and they deducted a mark for it. So I lost 5 marks like that, and then I lost marks in like theory a little bit, and like I don't know, some stupid mistakes I think, but like still disappointing, you know. What do you mean on my side? Like I got an A star. I went into university. I didn't do A levels. So I want to do A levels, like kind of nice. Oh, then you can just do 34 times 1.228 and times 1.228. I think it's 1.228, and then we can just add 79. So I got 120. Like that's easy. You guys can do better, like very much better. You know what I'm saying? My credit textbook was messed up. I had to cancel everything. Honestly, I mean, yeah, sure, but don't cancel things and do that. That's not nice. Because unless you have that much time, like I finished my paper in 1 hour and I had 2 hours, 2 hours or something. I don't know. I don't know how much time we have. But like I finished every single one of my papers early, except for Islamia. Like I used every single minute for paper one at least. Like I wrote stuff for Islamia so much. And in one of the questions, I got 4 out of 10. 4 out of 14 actually, I think. 4 out of 10, I'm not sure. And in that question, I wrote like 2 pages. Okay. Wow. And then for another question in the same paper, I got 4 marks for writing half page. Okay. And like wow, wow. Okay. Anyways, yeah. 1 hour 45 minutes, right? Yeah. Like you can finish a paper two in like 50 minutes, 60 minutes. And yeah, it's kind of chill. Just lock in, work hard, keep it up. And then once you get your grades, let me know what you guys get, because I'm kind of curious. I want to see if my teaching is good. And then you guys should probably, I don't know, yeah, pray for me or something. Yeah, super cool, right? Okay, then see you guys next session. Two grades level is higher with like 5 hours. What are you getting right now? Yeah, I need someone. Like I have already built something, but I just need people to like improve it and stuff. Like I have a website built and I have a Discord bot built, but then the thing is that I don't know much about coding and stuff. So I kind of want someone who knows about that stuff to kind of do that stuff for me. You know what I'm saying? Yeah, I did vibe code it. Like that's how it's built. But I still need like now. I used to have GitHub Copilot student pack. Okay, I still have it. But the problem is that what's it? That yeah, they changed the limits so bad. Okay, thank you, brother. Isolated pussy. Oh my god. No, I used to use GitHub Copilot, and in there I used to use I used to use multiple models. Wait, bookmark for what? What do you mean to levels? Also, I have one question entry for contra. You're gonna debit your purchase ledger control account and credit your sales ledger control account. You're basically gonna do you're gonna decrease both of them, okay? So on the negative side of both of them. Yeah, exactly. Two grades letters. I think I'm getting a C for MCQ. Yeah, you can change from a C to an A or something. Just take tuitions from me. Yes, that's probably gonna help. Though, like, I'm kind of busy these days, but yes, still, I can probably get time. Probably, like, I might be able to get time in the morning. Bro, wow, 1,900 crazy. 25. It's not really okay, bro. Okay, you don't have to show that every single time. I only help in accounting and like I don't help always, okay? So like yeah, like you're amazing, bro. Thank you. 23 out of 35 is not really okay. Like if someone I know got that, I'd be disappointed, I guess. But you can always improve. So yes, keep it up. It's better than a zero, I think. So yeah, like you'd still get an A or B with that marks maybe, but you can do better. You can go like 35 out of 35 or maybe like 34 out of 35. I remember seeing that. I've seen this diagram. The people who made it were probably laughing or something on it, you know. Who was that, bro? I got really bad for marks. 28. Yeah, just keep it up, guys. Just lock in. Crazy. Okay, guys, then see you next time, inshallah. Goodbye. I will I will leave now and then I will probably, I don't know, do something. Thank you all for attending. It was nice. I'm a hop off as well. Oh, sit down.